Happy Monday, everybody. Today is August 18th, 2025, and this is your Monday Market Update. Hope you had a great weekend. As we do this time every week, let's recap last week and we'll preview the week ahead. I'm confident that quiet is not in our near future, but we'll just have to see. Last week began on a cautious note. Stocks opened flat, but the weight of the new tariff headlines quickly dragged the market lower. News broke that NVIDIA and AMD had agreed to a 15% profit share with the United States government on chip sales to China. That dampened sentiment in the mega cap tech space, which has been the primary driver of the rally. Of course, we'll see how that goes. The extension again on the deal deadline was not enough to turn the market. There was a little digestion. Midday, optimism briefly returned after President Trump suggested progress in the Russia-Ukraine ceasefire talks. The S&P 500 even poked above 6,400, but the gains didn't last. President Zelensky reported that Russia was preparing a new offensive, dashing hopes for a quick resolution. Into the afternoon, selling pressures resumed. By the close, the Dow finished down 0.5%, S&P off 0.25%, and the Nasdaq was down 0.25%. Tuesday brought the week's first big test, July's Consumer Products Index. That's the CPI we talked about last week. The headline number was modestly hot, but the underlying details reassured investors that tariffs were not creating broad-based inflation pressure. That distinction mattered, because the CPI print that suggested tariffs were stoking systemic inflation would have forced the Fed to rethink rate cuts. Instead, traders took the report as confirmation that the Fed has a green light to ease in September. Market surged, led by consumer discretionary, financials, and tech. Cyclicals picked up the baton also as optimism spread beyond just the mega caps. By the closing bell, the Dow was up 1.25%, S&P up 1.25%, and the Nasdaq was higher by 1%. Momentum carried into Wednesday. Stocks opened strong, with the S&P 500 notching another intraday record above 64.80. Overseas inflation readings helped the story. German CPI came in right on target, reinforcing the view that inflation pressures globally remain subdued despite tariffs and trade skirmishes. What made Wednesday notable was the breadth of the rally. Now, small caps surged nearly 2% over 2 days, while laggard sectors like healthcare and materials, they even joined in the advance. This rotation does suggest investors were no longer just chasing the tech stocks, but spreading into previously overlooked areas. The Dow finished up 1%, S&P up 1/3%, and the Nasdaq rose 1/4%. The calm cracked on Thursday. The July PPI surged 0.9% month over month. That was the sharpest rise in more than 3 years and well above the 0.2% expected. Core PPI was equally hot. For traders banking on a smooth disinflation glide path, this was an unwelcome surprise. Markets sold off sharply at the open, with small caps taking the brunt of the blow. Of course, remember, we just talked about them being so strong in the last couple of days. PPI is a leading indicator for CPI, and if this jump proves sticky, it could undercut this immaculate disinflation narrative, and it could challenge expectations for rate cuts. Still, futures markets clung to near certain odds that of at least a 25 basis point cut in September, which did help dip buyers defend support at S&P 6450. It was a volatile session, but by the close, the damage looked modest. The Dow was down 1/4%, S&P 500 was flat, and the Nasdaq was up 1/4%. By Friday, investors were steadier. The PPI shock lingered in the background, but traders leaned on the idea that one hot print doesn't derail the disinflation trend. Tech traded mixed after Applied Materials issued some weak guidance that wasn't good for semis, but bargain hunting and continued confidence in September rate cuts helped the broader market hold firm. President Trump and trade advisor Peter Navarro's comments about tariffs briefly added some mid-morning volatility, but once again, dip buyers stepped in. Markets gapped higher at the open, following the solid retail sales report, that other data point I told you to watch. Markets quickly turned lower on consumer sentiment falling and the inflation expectation ticking up. Again, we talked about that before. Can we see the stag or the inflation, as Powell spoke about last year? That is the talk again, and that will be a headwind if it comes about. For the day, the Dow was up just about 1/10%, S&P was down 1/3%, and the Nasdaq was down almost 0.5%. For the week, the Dow was up almost 2%, S&P up 1%, and the Nasdaq up just over 0.75%. The market spent the week caught between two narratives. On one side, CPI and global inflation readings reinforcing confidence in that immaculate disinflation and setting the stage for a Fed easing in September. On the other side, Thursday's scorching PPI jolted investors into remembering that inflation risks aren't fully behind us. For now, optimism is holding, but the risk of stagflation is no longer just theoretical. let's look into this week ahead. This week brings fresh tests, not the least of which will be the Fed meeting in Jackson Hole. Now, this is not the normal Washington meeting. We're going to hear from Powell on Friday, and though this is a retreat, it seems to be a working retreat, and it has brought fireworks in the past, so we'll see what comes of that. Earnings, this will be a big retail earnings week, Target and Walmart. Now remember, these are the ones we need to hear from. Remember, contrary to what you may think based on the news, the consumer, that 70% of our economy, it's not the one that they're not the ones spending billions on data centers and new AI chips, which we hear about all the time. We'll see if we hear about them being stretched. Target and Walmart will hopefully shed some light there. Also looking for updates from Home Depot, Cisco, and Deere, companies that offer a cross-section of consumer, tech, and industrial strength. We'll get some housing data. The Fed heads will be back. Bowman on Tuesday, Waller on Wednesday, and then we'll get last month's FOMC minutes on Wednesday. We're going to hear about regional manufacturing with Thursday's Philadelphia Fed Index. Now, that is a leading gauge of factory activity. Of course, many eyes will still be on the labor market, weekly jobless claims on Thursday, and with that, the continuing claims, which continue to be very high historically. That's the week that was and the week to come. Let's keep our eyes on some of the keys to the market. At this time, AI enthusiasm, pending rate cuts, jobs, and related to all that, will tariffs cause stagflation? And by the way, the president's still working on Russia and Ukraine. Friday was Russia and Alaska. Today is Ukraine and Washington. Seems the EU is also coming to that party. So new definition of shuttle diplomacy, all while things are still hot in that region. For now, stay focused on your goals. This is all noise. We listen. But what I will continue to do for you is help to guide you through to hear the signal through the noise. If you missed Friday's video, by the way, it will give you some new perspective on the headlines. So check it out. Have a great week.